Morning, my name is Elliott. I'm the editor of the Energy Strategist. Today I want to talk a little bit about the natural gas inventory figures that were released this morning at 10:30, released every Thursday at 10:30 in fact. What we actually saw was, typically in this time of year you do see gas drawdowns. What we actually saw was a drawdown of gas out of storage of 151 billion cubic feet. That was a little bit higher than the consensus expectations and a little bit higher than average actually even for this time of year. The interesting thing about natural gas, and one reason why I actually think the natural gas market is more interesting even than the crude oil market right now, is that for more than 2 years now we haven't been this close to average in terms of inventories. As most of you are aware, natural gas prices have been very weak since the end of 2005. It came on very sharply after the hurricanes back in 2005. And have remained really depressed since about early 2006, middle of 2006. Lately, they've started to perk up again quite a bit. The main reason for that is that we saw bloated inventories of gas, higher than normal amount of gas in storage throughout most of 2006 and 2007. And now we're back to about average. And so far this year, we've actually seen not only higher than expected drawdowns of natural gas, but also a lot higher than average drawdowns of natural gas. And you got to remember these inventory reports are released with a slight lag, about a week's lag. So this is actually the data for last week. This week has been quite chilly across much of the Northeast, and so we're actually looking at a pretty big drawdown likely for next week's report as well. And this has really started to put a bid under natural gas prices. This morning I look at the natural gas strip price. Natural gas strip price is really just the average of the next 12 months worth of futures contracts. Now the reason I look at that rather than the spot price that you see quoted on television a lot is that gas is a commodity that's in seasonal demand. During the winter months demand is a lot higher than during the summer months, therefore prices tend to be a little higher. By taking the average of the next 12 months worth of futures prices, we sort of net out that seasonal effect. And if we look at it on a strip basis, natural gas prices are now around $9.70 for a million BTUs, which is much, much higher than they've been in a long time, certainly this sustainably. However, natural gas prices here in the United States still remain lower than natural gas prices in Europe. As we speak at this point, natural gas prices in Britain, traded on the International Petroleum Exchange, are around 53 or 54 British pence per therm. Now if you do the exchange rate and the calculation, a therm is about 100,000 BTUs. If you do the actual exchange and calculation, you'll see that prices there are about $10.50 or $10.60 for a million BTUs equivalent. So that means that they're actually almost a full dollar higher priced in Europe than they are in the US. Now what that means is that shipments of liquefied natural gas, which is just simply supercooled natural gas loaded on tankers, are not really making it into the US market. The last data that we have from the EIA is actually for November, and we've seen that LNG imports into the U.S. market were actually lower than in any month, any November month, all the way back to 2002. So LNG imports are coming down because gas prices are still lower in the U.S. than they are in Europe. At the same time, the gas inventory situation is really improving rapidly in the United States. My view is that this remains very, very supportive for any exploration and production companies with a focus on natural gas that are seeing rapid production growth. The other group that I find very, very interesting and have been recommending a lot recently in the Energy Strategist are the natural gas levered services names. Companies that do things like land drilling for natural gas here in the United States. Those are starting to see a lot of improvement as well. And I actually believe that with oil prices as high as they are, and as I spoke about yesterday, the inventory situation being quite bearish there, if we look at that versus natural gas, where I think things are really turning a lot more bullish, I think one has to favor natural gas related stocks here for the first time in several years. Thank you very much.